on a 7 cap exit, which I think is very modest.
Give us a 7, give us a 6.5 maybe.
Yeah, so 22% IRR on a 7 cap.
Nice.
And again, that's 13 months IRR. On lower than that, I think this deal could get close or surpass 30. And it gets a little skewed when you start to analyze an IRR under a year. But right around a year, we should be a 1.2 to a 1.35 equity multiple. Pretty easy. I feel pretty good about it. Welcome back to How to Invest in Commercial Real Estate. And today we are going over our second new deal for the month of March. It'll probably close in April, but we're going to call it the month of March. And it is the Kiddie Academy Redevelopment Fund 1.
Tell us about it, Braden.
Yep. So I know what you're thinking. You're thinking, Braden, what do you mean redevelopment? We develop Kiddie Academies. Why would we redevelop a Kiddie Academy? And I'm going to tell you.
Why is this one different than the other Kiddie Academy did?
Yep. So there's 2 Kiddie Academies. There's 2. There's one in Cypress, right outside of Houston. There's a map. There it is. It's right outside of Houston. The second one, leave it up, is in Lapatacong.
It's in New Jersey.
It's in New Jersey. The one in New Jersey, another early childhood education company, bought out the whole state worth of franchises, and those didn't do well. They ended up shutting them down. Kiddie Academy came back into the state once they failed and said, hey, we want to buy some of our locations back. So they
cherry-picked the best locations.
They sent them over to us, and they were like, hey, you should buy them. We'll find you a franchisee for this location. And us being good stewards of the franchisor, we're like, yeah, of course, that sounds great. If you can put a franchise in this, we love the location, let's do it. Mm-hmm. That's the first one. The second one in Cypress, an elderly, I don't know how old they were, but a couple, was owning and operating them. One of the members of the couple, had a heart attack. The other member was still working a full-time job, trying to do the daycare facility, the Kiddie Academy, operate that, her full-time job, his or her full-time job, and watch out for the spouse who just had a heart attack. It was just too much. They kind of put feelers out to the market, touched base with the franchisor and said, hey, we're struggling a little bit with this Kiddie Academy. Do you think you can find somebody who can come in and operate this for us? We would love a sale. There's another big operator in Texas. He operates 5 units total, I believe. Kiddie Academy units. He owns and operates 5 of them. And he typically owns his real estate, which is a good sign. It means he's super committed to that business and that real estate. He came in and bought this franchise out, and he is now operating it. We're putting brand new 15-year leases with 2% annual increases, 15-year leases on both of them, and a little TI allowance, freshen up the building, new paint, some more playground equipment, get enrollments back up to where they should be, immediately put them on the market. If you've been involved in any of our previous Kiddie Academy developments, you've seen that we've seen a ton of cap rate compression in these assets. So I think we're underwriting a 7 cap sale on these, and we should be able to do significantly better than that.
Well, and I like that we're coming in second generation where someone has struggled and they're going to sell it cheaper than they would otherwise. We're not having to build ground up brand new. So the cost point, the price per foot is lower than a typical Kiddie Academy.
The one in Cypress is open and operating. So, I mean, talk about no entitlement, no crap. I mean, the lease is done. He's operating already.
It's far less risk with coming in with one that's already built, rehab dollars, but already zoned, already permitted.
Yeah, correct.
Brand new 15-year lease. We're excited about him. The first one we did out of Denver went really well. We exceeded expectations. We have another one in Dallas that's finishing up. So, we're excited that these two will do pretty well.
Yeah, they're both put together. Like I said, we're signing the pre-leases now. We should be in and out within a year, and it should be, I don't want to say easy, but
tell us about what the numbers, what are the expectations? There's no cash on cash with these deals, or at least there's not going to be in the first year.
Correct, yeah. So they get 50% rent for the first 12 months. So it does produce a little bit of excess cash, but not really enough to distribute. We just build that up in the account for a rainy day, so to speak. The distributions come at the sale of each property, which, like I said, we're going to go in and rehab them, put them on the market immediately.
So we're looking at 12, 18 months max?
I mean,
Maybe
18
less.
months. No,
Yeah.
I don't see any way this is getting 18 months. I think
That's
these
why
are.
I said max, but okay, we're shooting for a year.
Yeah.
A flip. What is the IRR that we're projecting?
On a 7 cap exit, which I think is very
Well,
modest.
give us a 7, give us a 6.5, maybe.
Yeah, so 22% IRR on a 7 cap.
Nice.
And again, that's 13 months IRR. On, lower than that, I think this deal could get close or surpass 30. And it gets a little skewed when you start to analyze an IRR under a year, but right around a year, we should be a 1.2 to a 1.35 equity multiple. Pretty easy. I feel pretty good about it.
Okay, but with 2 of these in the same fund, what happens if you sell one, you don't sell the other one?
We distribute cash and
Just
then we
start
wait for the
distributing.
other one to sell. Yeah.
Okay.
So it'd be just a prorated amount of cash. They could get 50% of their cash back. They could get 75% of their cash back until we sell the other one.
Correct. And because, redevelopment of Kiddie academies doesn't happen very often. There's not a lot of failed Kiddie academies or redevelopments out there. We funded these together, and they're super small equity checks. I think separately they were, one was $350,000 equity check. The other one was a $450,000 equity check. And those are just hard to make sense of when it's that small. So we took both of them, we shoved them together, same timeline, same business plan, same brand, same exit, probably the same listing broker on both. It made sense to us.
Okay, so if someone's listening to this, is there still time to get in?
Man, this sold out in 48 hours. 48 hours. It was $1,041,000 equity raise, and it was gone. It was immediately.
Now, that could have had something to do with us selling one of our first Kiddie Academy developments and exceeding expectations and giving all this profit back to our investors.
Yeah, so the first Kiddie Academy we did was in Columbine, just south of Denver. I think the investor got a 19.6 IRR for the 24 months we held the money. We pitched a 20% IRR, and we pitched 18 to 24 months. We hit it right on the head.
So we even had some delays, and we still hit expectation.
Yeah, we had COVID. And we still hit expectation.
Yeah.
The next deal, and that was with Woodmont. The Kiddie Academy redevelopment deal is in Woodmont. We just exited another deal with Woodmont. It was a deal in Henderson, right outside of Las Vegas, affluent suburb of Vegas.
What kind of IRR did we get on that one?
Yeah, it was a single tenant Mexican restaurant. It was on Stephanie Street, and he said Stephanie Street, and I was just immediately like, I want it. I'm in. I don't care what it is.
Yep.
If it's on Stephanie Street, I'm in. I want it. We bid heavily. They were getting an offer a day, multiple offers a day. The only reason we got this deal is because of the relationship we had with this broker and the relationship we had with Woodmont. We were in and out in 8 months. It was a redevelopment, just like this Kiddie Academy redevelopment, existing building. You're going in, sprucing it up, putting a new tenant in, putting a new 15-year lease with 2% bumps. And we exited at a 5.25 cap on a one-unit single tenant operator, and the investor got a 78% IRR in 8 months. 78%.
Now, once again, we mentioned it's kind of skewed when you go under a year.
Yeah, and we pitched the same returns as this deal.
But we still hit more than 50% return in 8 months.
Yeah.
70-something percent IRR. Turns out when you make investors 70-something percent IRR, they reinvest with you. And that's why these Kiddie Academies, I think, sold out so quick.
Yeah.
I hate it, but there was a lot of investors who got their distribution check, and they literally just missed the reinvestment. And they were sending me emails, hey man, so sorry, I was on vacation. I saw the deal filled up. I hate that just as much as anybody else. A lot of them were trying to squeeze in. Believe me, we're arguing over who we can back down, how much we're backing ourselves down. No, Brian's in more than me. Joel's in more than me. Oh, I got to get them in. And it's hard to do this to make everyone happy. But the point is, we can't advertise these deals. There's not a lot of time once we launch the deal. There's a lot of competition to get in the deals. And if you want to get in, you've got to be on the investor list. You've got to respond to the email, and you've got to reserve your spot.
Here's a tip. By the time you're listening to this, of course, you won't be able to invest in this deal, but we are now already working on our next deal that will be coming out in the next 30 days. So maybe stay tuned and make sure you're on our investor list so you can get access to the investments.
Absolutely. Anyway, this was a deep dive into the Kiddie Academy Redevelopment Fund. Like Joel said, it's already full. We're super excited about it. I think it's our third or fourth deal with Woodmont. I think it's the fourth. And we should be in and out super quick. We've met the timeline on all of the other deals. It's going to be an awesome one. We're looking forward for more. Yep. Anyway, until next time.
All right, guys. Thanks.
Thank you.